Hello everyone, welcome back to our Accounting 210. In this video, I talk about chapter 2, some practice, and then also your My Accounting Lab, the assignment. So I'm on the page 4 of our handout, the last few pages. So it talks about exercise 2-21 said, hey, how do you separate direct labor, direct material, or period cost? I'm not going to do it everything, but kind of give you some ideas. So we said, hey, our cost object is our airline manufacturers, right? So we are thinking about we are making our airline, the airplane, the seats, the parts, those things. So the seats will be our direct material, and then production. Okay, look at the keyword production supervisor. So production, that's definitely our manufacturing, but it's supervising, so it's not direct labor, it's indirect labor, so which is also our manufacturing overhead, right? Indirect labor, manufacturing overhead. Depreciation, we talk about that in the factory, depreciation factory, so that's other manufacturing overhead. Machine, lubricants, that's indirect material. Keyword is machine, right? And then it's the lubricants, you should know is indirect material. Factory janitors wage, so factory janitor, so that's our indirect labor. Sample worker, that's direct labor. Property tax on corporate marketing, if it's marketing, that's our period cost. Plant utility, so that's our manufacturing overhead. Oh, we are almost there. Sorry, then I'll just finish it if you don't mind. Cost of a warranty will be our period cost, right? Machine operators, so machine operators health insurance. So that's your direct labor, everything related with your direct labor, not just their salary, but also insurance, benefits, that's direct labor. Depreciation on administrative, that's period. Cost of designing, so you design new plant layout, so you design, that's your design function in the value chain, so this is your period cost. Jet engine, that's direct material. Now, once you organize this, make sure you know what is the prime cost, direct labor plus direct material, what is conversion cost, that's your direct labor and your manufacturing overhead. Okay, so I focused on a project problem 2-44A. I think you already also have a video there from another professor, but I want to work this one more time with you. You can find all the solution, from the online, ask me, but I want to do this one more time with you, just to get the flow of how do we get cost of goods sold in manufacturing department. We said in order to get that, you first have to get the cost, you have to get direct material used, right? You have to get a direct material used. We said for direct material, you have the beginning, purchase, and then ending. So we look at direct material. I go through here, you just look at raw material, right? Raw material, last year end is this year beginning, and then this year, this is your this year ending. So you found out the direct material purchased. So we have 1, 2, 3. We have this 3. That's all we need. Beginning 14,000. We purchased 30,000. We still have 8,000. So we use the material 36,000. So we got the first step. Second step is cost of goods manufactured. How do we get that? We have to focus on our working process. So we have the working process and where's working process? Oh, working process beginning, and then what else? Direct material used, right? We already calculated, and then we need to get direct labor. And then we also need to get manufacturing overhead. So I'll just put the formula here. Working process beginning, direct material, direct labor, manufacturing overhead. That gives you manufacturer account for minus your ending working process gives you cost of goods manufactured. Working process beginning, we said it's 0. Direct material, we calculate 36,000. Direct labor, we found out 23,000. We need to find manufacturing overhead. So what is manufacturing overhead? Utility for plant, so this is manufacturing overhead. Delivery, this is our period cost, right? I use this one, sorry, period cost. Sales salary, this is our period cost. Planet janitorial service, this is our manufacturing overhead. Finished goods, finished goods. Sales revenue, customer service, so this is our period, this is our period. And then rent on manufacturing, this is our manufacturing overhead. So our manufacturing overhead 1, 2, 3. So you add those 3, you have this 4.9 thousand. You have this 1.35 thousand. You have this rent of your planet 9.6. So that gives you you got your manufacturer account for, you minus your ending working process, you minus your ending working process 5,000. So you manufactured is 69,850. And then once you get that one, you will do your cost of goods sold. So it's still beginning plus your manufactured available for sale minus finished, ending finished gives you cost of goods sold. So finished goods, that's all we need, right? So beginning is 0, manufactured this is available, and then minus your ending 2.5 thousand, you get your cost of goods sold, I think is 6,350 maybe, 63,350. So how do we get our income statement? How do we get our income statement? Is your revenue, cost goods sold, gross profit minus operating gives you operating income, right? Revenue, question told you is here. Cost of goods sold, we calculated 67,350. We got gross profit minus operating. We said this is operating. So we have 3 operating, right? 1.5, 4.3, 1.4. We have this. So that's your operating expense. So your operating income is 29,450. I really want you to make sure you get this one. I want to make sure you get this one. And then question also ask you about your also ask you about your balance sheet. So balance sheet, we said you just need to focus on the ending inventory of your raw material, working process, and the finished goods. We said raw material ending is 8,000. Work in process ending is 5,000. Finished goods ending is 2,500. So you get your total balance sheet of the inventory is 15,500. Okay, so I'm done with this one, and the next one I want to go through another quick one with you. What I'm trying to do, I cannot find my work. Is remember there is another one. 44. Cannot find. Okay, it's here. Sorry. Okay. So another one, 51. So this tells you about your pizza of your fixed cost, and then can you use it to predict or whatever, right? So I'm not going to really test you in the exam. I think I already posted the solution to the Blackboard. So make sure you just need to go through this one, calculate when your activity level is 5,000, 8,000, 10,000, what is your average cost? You can find out that the average cost, they are different. Why? You found out that for the variable cost, right, they are the same. But for the fixed cost, they are not the same. Fixed cost actually decreased from $2 to $1, but variable cost is the same. So average cost for each pizza, they decrease. So you cannot use, because your average cost for 5,000 units, it's 3.4. When it's 10,000, it's only 2.45. You cannot use this number to predict your other activity level number. So that's, you never ever use your average cost. You never ever use your average fixed cost to make a prediction. So never ever do that. If you do that, you will have a trouble. So that's the main idea for this problem. It's kind of a proof, shows you that your fixed cost for each unit actually decreases when you have a more output level, have a higher volume. Okay, I think that's all you need to do for chapter 2. Just let me know if you have any question. Email me, stop by my office, talk with me before, after class. I'll see you next time. Thank you.